right, peace and blessings, everybody. Welcome to the Sauce Factory Wednesdays. All right. Today we're gonna be going over trend reversals, 2 days, 3 day setups, using your fibs, understanding the reversal points in the trend, looking at market structure, knowing what to trade, what not to trade, how you should trade it, which approach you should take, when to buy and hold, the whole little gamut because it's all relevant. Right now, we got the good old boys Wayfair up on the chart because our good friend Lee said he was thinking about trading them today, and they were slow as molasses. They didn't go nowhere. So we was looking at this chart, and if you look at it, Wayfair like to consolidate a whole bunch. Don't worry, you're free to participate, Lee. Go on ahead and unmute anytime you feel like it. So let's look at it, right? We're on a monthly chart. So from October 22 to August 23rd, this is the range Wayfair been in, right? It's a simple high time frame. Look out. It's a 64-point range, right? Let's go ahead and make this a box a little bit shorter. So looking at that and understanding those principles, let's go to a daily chart real quick so we get some more candles on this. Boom. Block that out. All right. These are your screen points, but we can clearly see in the last 2 years, well, a year or so, right? The range been tightening up. So we got a new range. Okay. And that range is smaller than the previous range. You got a 38-point range here. Thing about that is you got to check your volume and open interest in the option contracts when you want to trade something like this because pretty much it'll go sideways. Lee's solution was, hey, I can do cover calls off of this, which would be great because you sell out the money, cover calls, selling premium always the best because buying option contracts is you buying insurance, right? Selling option contracts is you selling insurance to people. And we all know we never use insurance like that. It's only once in a while you actually need insurance, but other than that, you're throwing money out the window month over month, year over year, right? And they are winning. The insurance companies only take your money and invest them. That's why Berkshire and Hathaway is such a large company because they sell insurance. By the way, that's what Warren Buffett into originally. Side note. Now, the idea of that is it sounds great, but I was like, well, let's take a quick look. Wayfair don't pay dividends. And plus, you looked at the monthly chart, they on a slow decline, and now they consolidating in the 38-point range. They went to 68 to 38 points. Knowing that that is a big waste of money. We don't want to do that. We don't want to top $5,600 to buy 100 shares of this and sell premium off of it is not worth it. And we are 9 out of 10 be losing value because Wayfair haven't done nothing innovating in forever and a day. Their business concept is not new and is, slow growth on that. So my recommend is to do credit spreads. You still get the premium collection from the option contract, but this time you don't have to hold or tie up any necessary capital over a long period of time. So you can do credit spreads while prices inside this range, and it will go sideways. You can tear them out the bone. You can legit take 78 or sell 78, $76 calls, $78 calls, even $88 calls, whatever you want to do, right? Or when they're going up to the top of the range, you can sell, put premium, right? So you can be selling $48 puts as it's moving upwards. Let me put a nice little example. So when it's going up in the range, you can be selling puts. When it's going down in the range, you can be selling calls. As we see, they're currently in a downtrend. So we will be selling call premium, which is call bear spreads, right? And it is as it dropping is losing value, going farther and farther away from strike. You're making easy money. You can do this week over week, or depends on your account size. You can do this every 3 days a week. So you can get weeklies, wear them the heck out, size up on your contracts, and the same money you would be getting by selling cover calls, you can be making that way faster with less risk on the table because you're not tied up in holding the actual assets itself. You're gonna top anytime I tell people you want to top over $1,000 in something, it need to be paying dividends. I don't recommend nobody drop the bag on something. Nvidia's worth it, right? Amazon worth it. Some companies are worth that much money to put that much money up in, but other companies are not, and this is one of them. So you're gonna tie money like that, you need to be paying a dividend, and then from there you can reap the benefits. But here you can, create an artificial dividend by selling premium. But the better play is to sell credit spreads, which you hold no shares, and you just tying up your money with margin to sell a premium off of that. So you can play both directions anytime out the day, any day out the week, and you can reap those benefits. So that's way fair. Okay, people, any questions on this? Anybody got any questions? No, smooth. Let's keep it going. We ain't gonna be here all day. Already. So let's get on this Lindale. Linda. We call her Glenda. Raw specialty. All right. And then we're gonna drop down to a 1 hour chart real quick so we can get these section moves over here. But not whatnot. Yeah. Linda. All right. So you look at it, right? Prior to this current pop, you'll say, hey, what was the telltale signs that say gold gonna pop off like this? Well, you look at it. I'm gonna grab a date range because I ain't trying to do all that estimating and whatnot. So we had 12 days of straight down action, right? 12 days. So about approximately 2 weeks. And this is the third week. So when you start getting to those time frames, now you start looking at one of these great traders, Stacy Burt's. I can't remember the last name. I always mess it up, but you got 2 day setups, 3 day setups, 3 week setup, 3 month setups, right? In this case, this was a 3 weeks because this is week 3 now that price flipped the script on us, right? So it went down for 2 weeks, and then once it found a bottom, it reversed. So you got to understand, price will only go in one said direction for a certain amount of time before it find a way to reverse. All right. So I just wanted to show you this little micro trend, but we're gonna back out to the higher time frame, and I'm gonna show you what they was targeting. So let's clean the chart up. Get out to the monthly real quick. So so you can keep track of things, right? It's always best highlight your monthly levels. Want to highlight those. We're gonna simply put a line there. I think that was okay, wrong one. Wrong template. That side monthly high, and this gonna be a monthly low, right? This how I like the chart, especially on the Sundays when I'm setting up for the week. I always normally mark out the weekly levels, and then I visit the monthly levels every once in a while to go double check. All right, so then we drop down to the weekly levels, right? And the weekly levels tell you a very interesting story by marking out the weekly levels. This is last week candle. Boom. Marking out your weekly and monthly levels will keep you out of a lot of headaches and a lot of problems, right? A lot of traders want to take trades every single day. In reality, not every day is a trading day. A lot of times you may be trading inside of an inside market, which you look at these weeks, this was definitely an inside market. Could you have make money in there? Yes. Was it easy? No. With all these consolidations, that means price went backwards and forward, backwards and forward. And typically, as traders, we like to get hooked into patterns. Once you get hooked into a pattern and say, hey, I'm short in the market here for X amount of days, or I'm, riding the market here, I'm going long on calls on this day or whatever, right? When you get all this backwards and forward, you cannot sit down in the pocket and place a trade and just ride it out for the trend because the market's steady coming back. It hitting your stop losses, or you trailing profits. It's steady hitting your stops. Now you got to sit here and get into a shootout with the market, which is the last thing we want to do. We don't want to get in no shootouts with any market. We want a clear trending day. We want to take our entry and we want to ride it until it either hit our 10x trade or hit our break even. Whichever one come first, that's what we're going to do. In some cases, if the trades start breaking down, we could take out a dodge. But in most cases, you're supposed to sit back, relax. Once you enter that trade, one and done for the day, it is no need to re-enter the market multiple times because you could be wrong. And it's best to simply take that win or that L as is and go on about your day. Sit back, triage. No need to get into a shootout. There's no need to play cleanup, catch up, anything of that crazy notion, whatever. And it also no such thing as house money. That is your money. Okay, once that is realized profits, that's your money. So when somebody says, "Oh, it's house money," they crazy as hell. Because if I guarantee you, you get paid on Friday, and I say, "Hey, give me $100," it's house money. You wouldn't take that damn bet, now would you? You wouldn't give it to me. No, you wouldn't. So don't do that in the trading game either. That's foolishness. All right. So as you clearly see, uh, price. This was last week candle. This week we already took out last week high, so that means we're making progress. This reason why I do this, because the previous week, if you look at it there, right, we was going down. So we already know once we took that weekly low, guess what? I'm gonna be looking for sales for that current week. So we can go back and then we're gonna come back over to this week, right? I want to isolate it. And I give you like a last previous week example, a reason why we do this, right? So we can understand what's going on. Okay. Boop, boop. Then let's drop down to the 1 hour chart. Boop. Pop that up. Shouldn't get too many candles. It is a 1 hour chart, so should be decent. All right. So that was the previous high, previous low for the week. Now, once this Monday opens up, you see we took the low of the week. When you break a structure, right? So now we know a structure broken. You can go ahead and dot that line because you already know it's broke. So you can just keep it on the chart and just keep track of where you're trading at, right? Another thing too, you want to keep track of your Friday close. So where's Friday? Right there. Yeah, it's Friday close. So you want to keep track of that. Where my Friday template at? Okay. I normally just change this real quick. Okay. Cool. So when Sunday open up, when the market opens up on Sunday, it'll typically trade around the close of Friday area. That's where the range started creating itself at. But you notice first thing we did that Monday was take the low. Okay. Once we take the low, guess what? Price like the rebalanced price that it left behind, and you had all of this nice unbalanced price. Okay. So from that pivot point here, I want to run a fib to the lowest point, and that's our trend. Now we could go to the highest point of the previous week. You can go to the week low, week high, like that if you want to, and say, well, this is my low of the week, this is my high of the week, and that's why I want to trade it from. So when it breaks that level, you wait for your retracement, which it did at 38%. So this is, to your discretion to say, hey, I want to go from this pivot point to this said low because that's the low I'm looking for, price to reverse from. And if you went from this low to this low, you got a 50% retracement. If you went from the other high, you see what I'm saying, though? A 38%, I like to see 38% retracements or at least 50% retracements. 38 to tell me it's a good trend. Anything less than that, I'm gonna be looking for quick reversals. So when it gets to the 38, 50%, I know that's a good, strong trend. Now, since we already took the low at the previous week, right? We're gonna mark that out. We clearly see they got a 50% retracement on this. So we're gonna boom, hurry up, highlight that. And then we want to get rid of this fib. There we go. And then we're gonna mark out the negative 27 because it's always your target, right? That's one of my targets anyway. Whatever your target is, you can even target a zero level you like, but that's up to you. Okay. Remove the fib. It's no longer necessary. So from there, you see you got your breakup Monday low. Okay. That was your Monday low. You mark that out. Where's my Monday low? And then from there, you find your Monday high, which was here. That was the highest point on Monday. Boom. Okay. Do want to throw that template up there. It can look like it's getting a little cluttered, but it's just bear with me. You can also hide certain, uh lines like this. If I want to get it out the way real quick, let me just hide that. Now I have to see it, right? So this is your Monday range. From there, guess what Tuesday is? Tuesday is a range expansion day. Either going to trade inside or going to expand the range, in which it did what? This was your Tuesday low, so we're going to mark that out. Boom, boom. And then from there, we did what? For Tuesday, we went up. We never retouched the low, which builds your market structure. Boom. So that's your market structure shift, because guess what? Price was not going lower. So it wasn't a downtrend as you see, right? Price broke the downtrend, held. So now that is a higher low, and price start trending upwards for the next 3 days. So once we get here, that's Tuesday, Tuesday high. I mark that up. Oh wait, Tuesday high a little more over here. So we're just gonna find you Tuesday high. Okay, cool. That's our highest point on Tuesday. Great deal. So when Wednesday roll around, this is into your London market coming into the New York, all that good fancy stuff, right? So you're just tracking this. You like, okay, what's gonna happen here? This Tuesday high market comes down. This London market consolidate, right? Well, right at the Tuesday level, price consolidate. And then it breaks out to the upside, which tapping at your 50% retracement level. And if you look to the left, you'll ask yourself, like, what did it really hit? Well, this is where I got this 50% here. So you have a nice volume imbalance. You have a cluster candles. Anytime you have a cluster of candles, 9, 10 on a higher time frame, it is an order block. So I'm sure we go up or down, we can find an order block here, but we also see it's a 50% retracement. So that's a fine idea to say, hey, reason why. But we can also argue the fact that they was targeting this volume imbalance from here to here. Remember, I told you, if you have a strong wick pullback like this and a weak one right here, there's no cover. Typically, price will retrace back into these zones, right? So, you can just target that cluster or whatever, or you can just simply target the fact that it's a 50% field retracement. Anytime you get rejections at certain field levels, remember that is support and resistance. You don't have to overcomplicate it. Support and resistance. That's the most basic form of trading. All this stuff is nothing but support and resistance, no matter which way you go. So once they got up here, boom, strong candle down, boom, boom, boom. You got 3 black crows here. Boop. Okay. Hit a nice rejection zone. No looky back, right? After you get a nice strong push like that, price take that candle up. No huss, no fuss. So from there, here's one of my all-time favorites. You had a 3 candlestick order block continuation. Oop. Once you see this candle break down like that, you already know if you wasn't already in up here, looking at the fact that hey, we're in a downtrend. We had 2 days of rise. Third day was the reversal. This is your Wednesday high. No look back. No looky back in. That means they are correct. They did the correction. They rebalanced price, and now they're trying to run down. Typically, they run for the Monday low. Take that, or they're gonna go down to negative 27, which is price action. It's a targeted level of price action somewhere down here. I'm sure we look to the left, we'll see why. Okay, cool. Another form of consolidation. Boom. Here we go. Got a little play action. Let's see what's in this. Like I told you, consolidation. Call it volume imbalance, but you can really just target this consolidation here. You also have one here, a little small little gap, right? But definitely another volume imbalance right there. And when you get to gold, they love order blocks. Gold love is order blocks. It will find one, key off of it, and go to the moon on you. All right, so let's slide back over to the right. Bing, bing, bing. So from there, oh man, look at that. I didn't even catch this. Try not to pull a muscle here, but oh, okay. Trying to a little lopsided, but there you go. You had inverted head and shoulder, which was signal reversal pattern and going into the next week. So you would have seen that or paid attention to that. You trade gold on a regular basis. You could have been on top of that pattern. So that was signaling, hey, that's the end of a run. This is your downtrend, but you had to wait. This was also a reset because when Wednesday roll around is day one, day two, day three, price start rising back up again, right? Bing, bing, bing. And then I don't know what happened over the weekend, but yeah, let's go to the real life. Let's go back to the current chart. That's what happened. The buzz went off. They say, we go to the moon. Bada boom. Taking out those levels, doing a whole full. And you notice that same block from last week was a little held up for them. They kind of consolidated this level to break out again. So this is what I mean. They revisit price action. They skipped the heck over this order. I was like, oh, okay, let me get rid of that. Because they also did the quad witching for this chart. They switched charts. So this is the continuation, but you already know contract switch. That's what caused this level of violence right here. You'd be like, man, what caused all the violence? Because they switched contracts. So when switching contracts, typically I like to wait a day or two before entering that future market because of the simple fact that price is going to be off between your broker and the charts, right? So they can be operating on one chart, the volume ain't all the way there, but you looking at another chart, which the volume not all the way there. If you go to the contract chart, this gap is not there, right? If you actually go to that contract chart, the gap is not there. But on this one, it is. And your price can be a different level. Price can be trading like right here in this ballpark, right? It can be somewhere over here. And you trying to trade this or you trying to trade the gap and you're totally off. So you want to let the market, the charts anyway, catch up with each other and rebalance and then consume trading. But hey, y'all intelligent traders. I'm sure y'all doing the right thing when I'm not looking. So,
Question, Neo,
yes, sir.
on that goal, as you were
Mm-hmm.
just showing, the continuous chart had a gap, and then the August contract, I think, or December contract did
Yes.
not. How do you determine which one is the all-time high? How does that work?
Well,
Because
so
one of
the
them
weird,
looks like all-time.
yeah, because it'll be different. Because thing about the contract chart is gonna have less data, right? So when you're looking at that, I think everybody they in December right now because sometimes they'll jump around different charts because gold do have like monthly charts, right? And then
Mm-hmm.
let's go down to the 1 hour. So it depends on where they at with their volume. You got to know what chart people in, and from there you can kind of determine it. But it's that's why I always like to wait because they're gonna be off and to play it safe because I did that before. See, the gap is not here. See what I mean?
Mm-hmm.
It's only on a continuation chart. So to play it safe, that's why I always say like, hey, don't trade the next trading day or the next couple of days until the charts realign back up. Because I did it
Right.
before and I got my behind ate up. I'm thinking
Yeah,
I'm winning a
I witnessed
trade.
that. I
Yeah,
witnessed that.
yeah, you was with me, right? Yeah, so I got toe off the bone. As I learned that lesson the hard way. It cost me some money. You feel me? So I just it's better just to find something else to trade or not trade at all.
So,
And
question: Is this all-time highs or not? That's what I'm trying to figure out.
well, let's go to the continuation chart. It should be all time highs. Should gold been doing some historical things right now. Let's look. Oh, let's go to the monthly chart. Take me home. Yep, all time highs. Let's go. I got all these time frames. 6 months. Well, all time highs. Gold ain't never been this high before. Mm-hmm. That gold chart got hit with that fentanyl. It's high. No. May have to edit that out. Psych. All right. So yeah, we had all time highs. Well, only way to determine where we're gonna go from here is let's run a field extension. So let's get down to a lower time frame where we got some market structure at, and we're gonna run one. So do 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 do. Hidden and field extension. Where is a base? All right, this is a base of consolidation. Now let's go from here. All right, so boom, and then we're gonna come back here because that's why I pull back. We're gonna say that's the pullback. So we can potentially get to 2,500, 2,533, 35, 2,548. And these are potential levels we can go to if the calculations hold true. This is using a Fibonacci extension. So when you don't have price targets up there, then you can run extension and they'll give you targets based off the mathematical calculations. Okay. But I don't like trading all time highs. I'm more or less I like the point and shoot. Reason why I switched over to a 3 day setup because it already giving you like levels and targets, right? So when you wait the additional 2 days and let the range establish itself, you have a nice target setup. So you know where price can potentially go, and you can at least pick and choose what you're gonna play or not, right? So I take the patient route and I just wait for it to come back into a range. Now, since we are at an all time high, you currently looking at it, right? Doo doo doo. Price is coming back into the range. If price closes inside of this range, then that was our false breakout. We just set a new high, and then price gonna start trading downwards, right? Because who gonna say what time frame bull flag on right? What time frame see that on?
Man, look, that right there look like it's setting up. Maybe you can look at 15 minutes.
Yeah, let's go down because that's three straight, bear candles. Now you got to remember high, low, high, low, high, low. You feel me? You gotta make it do something now. Don't, remember I told you we don't pull muscles around here. No, sir. This that's solid. That's a quality trend here. This a two-parent household trend right here. There ain't no disruptions. That this chart got two parents in the house. Now let me show you a solid flag. All right. Shoot. Me and my jugs, I'm messing up them. That. All right. Cool. It don't matter how way you spell apple, they know what you're talking about. All right. What was that? My boo thing. All right. Boom. Okay, this was last week. Remember, we had that dark cloud covering for the people who didn't see it. It was back out. Boom. So everybody remember 2 weeks ago on that Sunday when I called out this pattern, right? We did the whole little what pattern is this? And we called it out, right? Dark cloud covering, that's that pattern. And what we get the very next week, it would had a bearish week of Apple, but right now I found some level of support. Now it's trying to push up. Now let's drop down to the 1 hour and I can show you this. What I like to see. All right. You get out the way, buddy. All right. So from there, where's my channel tool at? Boom. I don't feel like doing it the other way. I'm being lazy. Okay. Now that is a bear flag. Why is that a bear flag, right? Let's just talk about it. You had consolidation, making highs, lows, and then it tanked. Perfect bear. God damn, stop it. You're embarrassing me now. All right. See, that's what you want to see when you forming a flag. Bull flag or bear flag. You want highs and lows, highs and lows, highs and lows. You want price to go up and down, ping pong around, and then drop or pop, whichever way. Right? If it's a bull flag, you want to go boom. Bear flag to the dirt. This is Apple. This is a live example. Go to the dirt. Right? But in most cases, you're looking at a bull flag. You need this your pole. Boom. All right, let's channel. Then you have price drift down like that. Okay. ain't gonna do it the way I want you, but whatever. Boop, boop, boop. All right. And then when it acts perfectly, boom, 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 explode. Okay. Then you kind of want you low key, you want the retest, but sometimes they don't give it to you, right? In a perfect world, they'll give you a retest. In most cases, they don't. So let's say, hey, you can give me a retest or rebalance price. Now the caveat is you don't want this thing to make a 50% retracement. So when they do a 50%, if it goes deeper than that, that's me overdrawing a flag. But if it goes to 50%, then typically kind of throws the flag off. You don't want to go below that because then it's kind of like violation, right? But your measured move is the pole. So you'll take this, clone it, bing, put it at your breakout point, drag that over there, like that, like that. Put that joint right there. Then you say, hey, this is my measured move. What is my measured move? Boom. Oh, $259.49. That's my measured move, right? And then you can just calculate and say, hey, what's the ATR apple? Do the up and down factor of that, and then you can guess like how long it should take. But here's another little because I got time and I'm extra smart on my hands. We're gonna do it just like this. We're gonna say, well, it break out that day, and if price follow this said trend, well, guess what? I can assume price will get here in the ballpark of August 20th, 22nd on a Thursday. It should get there, give or take a day or two. Voila. Now, let's play the same game over here, right? And also, you want to do a full move, measured move, and then you got your half move, right? Oh, and let's see what this move was for that. Boom. So that was a 13-point move. Boom, boom. Okay, so we're gonna say 14, and we're gonna take that back to 7. Okay, so we're gonna say, hey, 7 at that angle. Boom. So you see, it says July 25th. When did we get here? A couple hours ahead of time, right? But we got there at the same time. So you see what I mean? It works. It's crazy, but it works. If it's just geometry, right? If price tag goes at that steady angle, at this specific angle, for a straight amount of times or a certain amount of days, it will land there at this date and time. It may be off by a couple hours or a day or two, depends on what may happen, and they may drive price there, but it will get there at that said time. That's how you can judge how much time you need to buy on your option contract to hold that said trade. So you'll times this by 3 and say, well, if we get there in August, it's July now. That's next month. Let me buy September, October contracts, and I should be smooth to hold that trade for that amount of time. Any questions on that? Okay. So unlike this time, I'm not gonna overkill the thing because I know we've been going like 40 something minutes each time. So we're gonna make sure this one nice and sweet. So we're gonna go on ahead and stop this one here.